Welcome to The Driven Deal, the podcast where real estate professionals, investors, and industry experts share insights, strategies, and trends shaping the market. I'm your host, Jose Angel, and in each episode, we dive into game-changing tactics, automation, and success stories to help you stay ahead in the real estate world. Whether you're an agent, broker, or investor, this podcast is designed to bring you valuable knowledge to scale your business. Let's get started. On today's episode of The Driven Deal, we're excited to welcome Dedee Boring, the founder of Boring & Co. and a trailblazer in real estate development and investment. With a strong background in land acquisition, entitlement, and property development, Dedee has built Boring & Co. into a firm known for its strategic approach to creating high-value real estate opportunities. Beyond her success in development, she is also passionate about empowering women in commercial real estate. She co-founded WISE, Wise Women Invest in Real Estate, an organization dedicated to providing education, resources, and support for women looking to thrive in the commercial real estate space. Dedee's expertise in navigating complex transactions, scaling real estate businesses, and fostering opportunities for women in the industry makes her the perfect guest to discuss how to break barriers, seize investment opportunities, and build a thriving real estate portfolio. Get ready for an insightful and inspiring conversation. All right. Well, thank you again, Ms. Dedee, to making the time. Welcome. Can you share a bit more about your role and how it fits into the bigger picture of, at the Boring and Company?
Sure. So Boring & Co. is my family business. I love working with my family. It's my husband and I and our 4 adult children. So we have 3 boys and a girl, and they all work in the business. My role, I would say, is probably acquisitions and asset management overseer. So I'm the one that right now we just got a storage property under LOI. Our LOI accepted yesterday. So of course that starts the clock ticking, right? And so I am the one that's scheduling the loan appointments and scheduling the surveys and the title and making sure that we have all the documents we need to do due diligence in a couple of weeks. So it's getting the PSA started, all of those things. So that's my primary role with Boring & Co. My secondary role, as we all know, is capital raiser. Everybody who ever raises money for or does any kind of commercial real estate deal usually has some capital raising roles. And so I would say that acquisition and asset management, just overseeing all that process and the transaction process. And then after that, of course, capital raising and finding investors so that we can do the next deal.
Nice. And that's going to be my next question. That was going to be my next question. I mean, you already kind of summarized it, but what does a typical day look like for you?
Oh, I saw something recently where some lady said that she blocks off time for her different jobs. So she does 2 hours for this one and 2 hours for that one. And I tell you what, I have 5 businesses. That would be an interesting amount of blocking of time. Maybe that would be more effective. Maybe I should look into it. I don't know. But I will say, this morning I was on an asset management call for 2 of our properties with a property management team. And then I came and I'm doing this with you. And then I will immediately from here, I'm going on another call with our acquisition team for our new property that we're taking over and getting that whole process started. And then after that, this afternoon, I mentioned before that I have a women's networking group called Wise Women Invest in Real Estate. So I have a meeting with some local chapter leaders in Houston about their chapter and what they need to grow and succeed in that market. And then later on this afternoon, I'm going back and talking to our lender about this new property. And so to me, it's just a constant taking off of hats. So I'm wearing this hat now. No, I'm taking that one off. So that's a typical day for me. Ends about 6, starts about 7.
But you seem very passionate about it. I mean, real estate is a fascinating industry, and I mean, there's so many components. Everybody thinks that it's a passive business, but there's so much going on that you have to be present and deal with a lot of situations that arise throughout the day.
Yeah, so I think that whenever we're getting new investors that come into our Wise Women Investing network, we always suggest that they go passively invest in a deal before they go active. because I don't know that a lot of people, especially if they come from the residential side where they are large and in charge of that one property or maybe 40 properties. I don't know. It kind of depends on their portfolio, but um, it's running a business. So you're buying a business that has a tangible asset attached to it, which is great. But if you don't run that business properly, then the asset's going to be worth nothing. So as everybody says, an asset is only worth what people are willing to pay for it. They're only willing to pay for it what's going to make them money. So if you're not running the property properly, if you're not doing that, if you're just being lazy and not making sure that your employees are selling and doing their thing and making sure that your current residents or tenants are being taken care of, then it's not going to be a valuable property no matter what market it's in. It just doesn't matter. You could be in the hottest market there ever was. I mean, you can look at Austin. Austin has a ton. I mean, that was the sexiest property or sexiest market out there was Austin. And everybody wanted to be here, right? Because we have great business strategies here. We have great people coming in like crazy. And then, so we got a lot of lazy investors, in my opinion, where they just thought they could buy a property and ride the market and not have to do anything. And as we all saw with the interest rates, with the way that rents are not being able to be achieved per our pro formas, you are going to have to work the property. You are going to have to run the business plan. You can't just sit back and let the market take care of itself. Understanding that if you become an active buyer and you go in and you want to actively manage these properties and not passively invest in a property, that you are buying a business and that you are going to have to run that business plan. We are not in a market where you can just let the market decide what the value of your property is anymore.
Yes, of course, definitely. And I heard you mention that one of your roles is to go out and search for these investors. How do you do that exactly? By networking?
Built a whole network around it, right? I mean, yeah, it's not something that, unless you come from a background where you have investors and you're bringing it to this, maybe you have some single family investors that really loved you, saw what you did, and you did really well with them. They probably would come with you into multifamily or a commercial property pretty easily. But I always advise anyone I ever talk to start working those investors, those friends and family, that getting that list together before you even have a property, even though it feels weird or uncomfortable or awkward. If you say, oh, I'm really investing in multifamily, but I don't have any yet, that does feel awkward, right? Just getting a list together of people that might be interested when you do have that available is so valuable. And it's something that I did not listen to and did not do, and it hurt me. And so I try to push that and always say, do it before you have a deal. Start working on that list of investors before you have a deal. And then once you have a deal, constantly getting together with other people that have lists. For a while, it's going to be where you have to partner up with people that have been raising capital longer than you, so that you have that as part of your, not your, I'm trying to think of the right word. You have that as part of your splits. So as you split up the property on who gets how much ownership, you have spots available for people that can come in that have more experience capital raising than you. So, and until you build that list yourself, but it takes a long time to build those relationships, and just be patient and give yourself some grace on that. But also realize that you might have to take a less of a cut so that you can get people in to help fund your deals, so that you can keep going and keep building your case for why they should invest in you, with you and only you, and you can do things by yourself.
All right. Thank you for that insight. Definitely, I'll take that advice right now.
Yeah.
Nice.
That's probably one of the biggest questions that you guys get, is about how to raise capital.
Yes, of course. I mean, it's normal. Here in
Yeah.
Honduras, people work a lot with the banks, but we are starting to see these private lending pools being created. And at the end of the day, it's like you said, the sooner you start building that network relationship and letting people know that you are a serious investor, or that you have intentions of being a serious investor, and that you have a good eye on spotting opportunities, the better.
Yeah. Yeah, I think it's just a matter of getting out there, and it's network, network, network. People cliche say your network is your net worth. It's not a cliche, it's accurate. It's accurate whenever you want to find a really good partner for a lending partner, then and you go to your network because these people were able to do business with them and do it well, and they trust them, and you trust those people that are in your network. So your network is key, and it's not just going to the little lunch and meeting, Bob and saying, "Hey, Bob, we're okay now. We're friends. Let's be partners." It's getting to know them. I can't tell you how many times I have partnered up with somebody. It's too many, partnered up or said, "Oh, just come on a deal," or whatever. And then you deal with partnership headaches because you're not a good fit. So we are so much more discerning now than we used to be as far as picking partners for deals and who we would want to be part of that deal. And then also being super transparent of what your role is, what my role is, how we're going to get things done. The more transparent you are to your investors and to your partners, the less headaches. So it might seem awkward at first, but it's so much better down the road. Just have those conversations before you even get started.
Of course. And any major shifts that you're seeing in the market right now, Dedee?
Yeah, so I think I had a really great conversation with a multifamily broker in Dallas yesterday. And they're definitely seeing Class A and Class C properties doing well, and maybe the mid Bs, 1980s product, not doing as well. And value add is struggling, and that's largely because it's harder to raise. So do you want to raise for CapEx, those kind of things? So I think that's shifting. I think that due to our political environment here in the States, that people tend to be a little bit slightly more hopeful on that side, but then you have things politically that could hurt your business plan. So while I don't care who anybody votes for, I just hope you do. I do think that it's important that you, no matter whose administration is in there, that you stay up to date with those things that are happening, because they're going to affect your business plan, right? So if regulation goes into play, we haven't had bonus depreciation at 100% for 2 years, right? Now it looks like it might come back. That's a huge deal. Tariffs, it looks like everything's kind of on hold right now, but if they do come back, that's going to be a huge deal on people's labor shortages and labor force, on how much wood cost and how much things cost. That's going to be an impact of your business plan. And those are hard to underwrite for, but they're always something to keep in mind, obviously. So we got hit pretty hard when in 2022, whenever we first got a multifamily into property, and that's when the interest rates went right up, right? And so we had issues with our lending fell apart, and then our investor pulled out because he was nervous. And so it was just kind of a onslaught of things that happened due to policies that were in place from a different administration when we first started. So definitely keeping abreast of what's going on the political side, not to go get in fights with people on Instagram, not that, but because you want to make sure that you are forecasting appropriately for what you're doing with your business plan for your properties.
Watching out what the Fed is going to do with the interest rates and everything, right?
Yeah. I mean, that seemed to be like the first thing, right? But then, watching what's happening with insurance, what regulations, what deregulation is happening with insurance. We actually had a really positive thing on one of our storage properties. This week, we found out that our premium for next year has gone down $4,000. That's huge, right? So that's huge. And that's a great savings that we're going to be able to put in, especially when our interest only period is going away for our loan. So that helps us kind of offset that, right? So that's a huge gain for us that happened this week due to just some strange things happening in the insurance industry. So always keeping on top of what's going on in all the industries that really affect your business.
Let you mention that. How has AI impacted your business growth strategy? If it even has.
I just think it helps us get things done faster. I have a real love-hate for AI. I love it. I use it every day. I use it several times an hour. What are we kidding? I mean, it's just so easy to be able to say, these are my thoughts, make it look cleaner so I don't have to worry about punctuation, and I'll spell maintenance correctly and not wrong. I love it for that. I love it so much. I love the fact that but then I hate looking at different emails and going, AI wrote that. If I have to say the word unlocking or demystifying one more time, I swear to you. But, there's certain little AI triggers that you can see a mile away that I think kind of is taking away from our creativity. When I tell you, I mean, we use it, and in our storage properties, the trend is to go remote. So the trend is to use all of that technology to be able to go remote and not even have employees, which obviously makes the property, if done well, and that's the big key here, if done well, can make the property run so much more efficiently, right? If done poorly, meaning that you just rely on technology and don't manage your properties and go out there and see what's physically actually happening because there's a human component to everything, then you're going to be in big trouble. So, yeah, I mean, I'm not as advanced as I don't know if you've ever met Vanessa Alfaro. She is an AI queen, and I tell you, I'm not as advanced as her, but I tell you, I use AI, multiple different AIs all day, every day. So it does help me with my business for sure.
Nice, nice. And speaking of your business, what has been working well for you right now and what has been kind of frustrating?
Debt. I mean, debt has been so frustrating. I think we can find investors, right? We can find investors. There's people that want to put money into real estate still. There's people that love the specific niche that we're in of self-storage. So that's not as much of an issue, and I love that for us. But finding debt, banks don't love self-storage as much. So it's a month-to-month contract. We have month-to-month leases instead of year-long leases like multifamily. So somebody could pick up and leave anytime. And just that for a lot of banks, that tends to make it trouble. It's struggling, and they find it more risky, I guess is what you should say. It makes banks find it more risky. However, one great thing about storage is that it does qualify for SBA loans. Dipping into the SBA market here with this next acquisition, they go up to $5 million. Storage facilities are not like multifamily where they're $50 million usually. So they many times fall into that SBA bucket. And so we'll see how that goes. But I'm hoping you can get some really decent LTVs with SBA lending. So here's hopeful that'll work out. But I think lending is what makes all deals fall apart. If you can cut expenses, you can do a whole bunch of stuff to add value, but it's really hard if you have a 13% interest rate or a 10% interest rate.
And what tactics have you been using to getting people through the door? What has worked so far, and what do you think hasn't worked that well?
So explain it to me a little bit. Get them into the door to my storage facilities, or get them investors.
Like
Okay.
attracting new customers. You mentioned that it's a month-to-month lease, right? Since it's not a residential property. How do you maintain occupancy rate and a higher percentage?
Yeah, so that's a constant thing that we look at. And we go through a season. It's seasonal. So we're about to go into the heavy season. So spring and summer are when people are on the move, right? They don't like to move in the cold. And spring and summer are when people move especially the summer. So we do a lot of different things like we definitely have different tactics on Google AdWords and Facebook Marketplace and using those type of things to get people in the door. We have mom and pop type facilities that have been there a long time. That's our wheelhouse. We like to buy undermanaged properties and manage them better. And a lot of times you need to get in the community and just be part of it and, support that local T-ball team and all of those kind of things. But largely it is a matter of just making sure that your website is up to date and that you are competitive with street rents and that you are constantly monitoring. And I mean like every day. You are constantly monitoring with your software and your technology. Okay, well, you down the street has a 10 by 10 for $100 and we have it for $85. Well, we can raise ours up. So just monitoring that and seeing what your competitor's doing and how you can compete or what you need to do if you need to pull back.
And speaking of which, in regards to the competition, how are you keeping yourself competitive?
I mean, when it comes down to it right now, everybody is financially struggling. So for us, we just need to be lower. Whatever our competitors are doing, if the REITs are the big guys like Extra Space, Public Storage, U-Haul, all of those people are at a certain price, we like to be a little bit lower. So that's our goal, is to definitely come in at a price point that will help our help our customers. So
Nice.
just being lower.
Nice. And any big plans for 2025? Where do you see yourself from now into the next 6 to 12 months?
Our goal is to get 6 new storage properties in 2025. It has so far been a little bit harder than we would hope for, but then just because people didn't come right out, there weren't a lot of new properties on the market in 2024 at the end of the year. So what we just got the LOI accepted on is a property that we actually had an LOI accepted on in August, and then we pulled back on that because we couldn't find lending for it. But now that the lending's a little bit better and they came down on the price and some other things changed, we were able to revisit that, largely because they accepted another offer from someone else that fell through. So we're seeing a lot of properties come back to market that were on the market. Maybe they fell through and they weren't able to get things done. And so, yeah, so that's kind of our biggest goal, is to get 6 new ones this year. We got 2 last year. We wanted 4. I've talked to many people, including really, really successful people in all the spaces. And I don't think anybody really got to the goal of what they wanted to get last year. You know, it was hard. It was a hard year, but I think we're all very optimistic for this year. As for my women's network, I want to get 500 members by the end of this year. I'd love to. I mean, we are approaching 50. We just launched in January. We're approaching 50, and I would love to get more women involved in commercial real estate investing. Yeah, so that's a big goal for me.
Nice, nice. And any major challenge today that if you could solve, what would it be?
Any challenge today that I could solve? Oh, I think finding partners to do deals with. I think finding investors is always a good one, and then finding lending partners that love storage. That would be our biggest challenge. But that's about it. I mean, I think that we are a very driven family that likes to really go aggressively to get things. So I don't know that we focus on the challenges. We just keep trying to overcome just hop over those obstacles, move on.
Nice, nice.
Yeah.
Thank you very much, Dedee. That was great.
Yeah.
Where can people reach out to you if they want to get in touch with you?
A couple of ways. You can obviously find me on LinkedIn, Dedee Boring on LinkedIn. You can find my family business at boringandco.com. You can see it up there. My name is Boring. I am Boring woman, married to Boring man, have 4 boring children. So there, now you remembered it. So boringandco.com if you're interested in investing in self-storage. And then if you're a woman that is interested in investing in commercial real estate, or you already are investing in commercial real estate, we do have a very high value women's network called WISE. And then you can go to sheiswise.com and learn more about that network at sheiswise.com.
Perfect. Thank you very much again, Dedee. I hope you have a good one, and thank you.
Okay, awesome. Thanks.
All right. Bye, Dedee.
Bye. Stay safe in Honduras.
Goodbye.